Welcome to Stock Symbol Selects, where we decode market moves, one symbol at a time.
The rise of domestic robotics. 3 stocks with real upside in AI automation. Automation is no longer a sci-fi fantasy. The machines are working, and they're reshaping not just factories and warehouses, but investment portfolios too. This chart of the Robo ETF shows it clearly. The tide is turning. Today we're breaking down 3 domestic AI automation companies. One you should know, one that's gaining massive momentum, and one that could be the safest bet of them all. Let's set the stage. According to Bloomberg, global spending on automation and AI is expected to hit $300 billion by 2026, with a compound annual growth rate, or CAGR, of over 15%. CAGR simply tells us how fast something grows on average each year. At the same time, CapEx, or capital expenditures, across the automation sector is surging. That's how much companies are spending to expand capacity. Think robotics lines, data centers, and smart factories. As seen on company filings, U.S. automation leaders are ramping up capital spending by over 30% annually. And to that, new government incentives through the CHIPS Act, IRA, and U.S.-based reshoring policies, and you have the perfect storm for American-made automation. The bottom line? Spending on AI and automation is no longer optional. It's vital for scalability, innovation, and sustainable growth. Companies not adopting it risk being left behind. Tesla, symbol TSLA. We all know Tesla as the EV leader, but under the radar, it's fast becoming a robotics and AI infrastructure company. Enter Optimus, the humanoid robot that Elon Musk says could be doing factory work, retail service, or even elderly care within the decade. Add to that Dojo, Tesla's supercomputer built specifically to train autonomous systems, and you have a company that's not just building cars, but training robots. The risks? Valuation is still rich. Execution timelines are unclear. Musk's unpredictability is always a factor. But the weekly chart tells us something important. Tesla, or TSLA, has reclaimed its 30-week EMA and could be setting up for a longer swing higher, signaling early trend strength. You may not know this name, but Symbotic, symbol SYM, is the AI brain behind Walmart and Target's warehouse automation. Their robots don't just stack shelves, they optimize entire fulfillment systems using machine vision and AI. Backed by SoftBank and partnered with Walmart, Symbotic's revenues have grown over 60% year over year, and it's just scratching the surface. Their business model is sticky, combining hardware plus software plus service contracts. The risks? It's not profitable yet, and valuation is aggressive. But it's a momentum play in one of the highest demand niches. The weekly chart shows consolidation after a massive run-up, and could be ready for a new leg higher with volume picking up. Rockwell Automation, symbol ROK. Rockwell Automation is the legacy player here. For over 100 years, it's helped power America's factories. But today, it's pushing into smart manufacturing, digital twins, and predictive AI. Its acquisition of Plex and investments in edge computing are paying off as more factories go digital. The stock isn't flashy, but it's profitable, consistent, and offers exposure to the AI revolution without as much volatility. The weekly chart is forming a long base, suggesting accumulation, a healthy setup for swing to long-term investors. If you want automation exposure with less risk, Rockwell Automation is a name worth watching. Looking at the comparison table and analysis, here's how they stack up. Tesla offers the most visionary upside, but comes with execution and volatility risk. Symbotic could become a multi-bagger if growth continues. Rockwell is the stable workhorse in the group. So what's the smart move here? If you're bullish on US-based robotics, consider a balanced allocation like this. 50% Symbotic for momentum, 30% Rockwell for stability, and 20% Tesla for long-tail optionality. The game plan. 1. Use weekly charts to spot trend confirmation. You want price above the 30-week moving average on rising volume. Set price alerts near breakout levels. 2. Watch for earnings, insider buying, and product announcements. And 3. For added exposure or a diversified bet, look at ETFs like Robo, the Global Robotics and Automation ETF, BOTS, the AI and robotics leaders, or ARC-Q, ARC Autonomous Tech and Robotics ETF. These will give you a broad stake in the automation revolution without betting on a single name. The future is no longer something we're waiting for. It's arriving in forklifts, factory lines, and fulfillment centers right now. The question is, will your dollars be part of the machine? If you enjoyed this breakdown, hit like, subscribe, and drop a comment. Which of these stocks or ETFs are on your radar right now? Remember, this isn't financial advice, just insights based on research and market data. Remember to do your own research and due diligence. Thanks for watching, and we'll see you in the next one.